portfolio. Diversification is the golden rule of investing. Don't put all your eggs in one basket. Here's how to achieve it. Asset allocation. Allocate your investments across different asset classes like stocks, bonds, and real estate. This helps spread risk and manage volatility. As a beginner, a higher allocation towards stocks for long-term growth is common, with a smaller portion in bonds for stability. Invest in different sectors. Don't limit yourself to just one industry. Invest in ETFs or index funds that track broad market sectors like technology, healthcare, or consumer staples. Master dollar cost averaging. Dollar cost averaging is a powerful strategy for long-term investors. Here's how it works. Invest regularly. Set up automatic deposits of a fixed amount at regular intervals, for example, monthly. This helps you avoid investing a lump sum at the wrong time and averages out the cost per share over time. Reduce volatility impact. Market fluctuations are inevitable. Dollar cost averaging helps you buy more shares when the price is low and fewer shares when the price is high, smoothing out the overall cost. Rebalance your portfolio periodically. As your investments grow at different rates, your asset allocation may shift over time. Rebalancing involves selling portions of outperforming assets and buying more of lagging ones to maintain your desired asset allocation.